As I've mentioned earlier, there's been some flat trading at the beginning of the week. The volumes have begun to rise. Take us through the market activity today. Who's responsible for buoying the NSE 20 up?
Well, thank you very much. We've seen a lot of activity, particularly in the services segment of the market and the financials, whereby we've seen Safaricom today have some trades taking place at a high of 590. This can be largely attributed to profit taking by most speculative traders in lieu of the uncertainties in the market, particularly in taking into account the referendum, the referendum in the horizon. Most investors are playing about with the market. So definitely the week started a bit low, but towards the end week we've seen some bit of position taking and a bit of cashing in terms of profits.
Now, Cooperative Bank has been among the top performers of the week. What would you say are some of the main issues that were driving the movements on that counter?
Well, for Cooperative Bank, it's an interesting scenario because up until their half-year results, their first quarter results this year, we saw that their profits were up 30%. This was expected. I believe retail investors are looking for a counter that can assure them a certain degree of return. And with the half-year in the horizon just about to close, most investors are expecting to book in some of the gains going forward. So even in the near term, we do expect a cooperative to do a bit better. Yeah.
Now, there's been interesting reports on the newspapers today, corporates negotiating for higher returns with the banks. It's been quoted that East Africa Portland said it recently found that the money it had put in the bank to earn interest was actually earning lower than the treasury bill rates. How can you explain exactly what's happening there?
It has been a very interesting phenomenon because up until, say, last year, a year ago, T-bills were enjoying 8%, 6.7%. Now things have changed. Interest rates right now, the last auction of the 91 day was at 2.639%. So with this in mind and very low interbank rates for the banks in interbank rates, we've seen that most corporates can't afford to have a passive investment strategy. So with this in line, most of them are finding it difficult surviving, particularly in a market whereby liquidity is quite high. So most of them are forced to be proactive, try to negotiate better terms for their money as they try to manage their cash in their books and their emerging needs. So as we go forward, we are likely to see that more and more companies will come on board, particularly the likes of Safaricom, EABL and BAT, who have quite huge cash reserves balances. You're likely to see them trying to readjust their portfolios to suit the current interest rates regime in the market.
Now, still sticking with the fixed income front, as predicted, the 25-year bond was oversubscribed. Analysts were very clear that 7.5 billion shillings was quite a little money to raise in this market, and that the market is able to absorb more debt than that. What's your analysis of that particular issue?
Well, this particular issue is quite interesting in the sense that I believe, my take is it was a clash of two investment styles, whereby you had the banks on one side and the fund managers on one side, whereby the banks manage an active trading book and the most funds hold maturity. So as it were, the funds carry the day. I mean they bid at quite attractive, at quite low yields, and they got most of the bond. Now we are finding whereby in a scenario whereby we have a 300% subscription rate, definitely a bulk of the investors were locked out, and this is why you're seeing that this particular paper is going to generate a lot of interest going forward with the ones who missed looking for it in the market. So we are likely to see yields going down, just reflecting what has been there in the market, whereby the interest rate environment has been quite on the southward trend.
And of course, this is a very clear indicator, of the market's ability to absorb debt. But since there's nobody raising a huge amount of money, at least the government isn't, this money is definitely looking for a place to go to.
Yes.
What do you think this implies going forward now that the government has seen the rates at which the market can absorb?
Well, I think there are two likely outcomes here. One, with the budget deficits that was announced by the Minister of Finance, we are likely to see that the government is likely to issue more issues going forward, particularly infrastructure bonds, whereby they have a target of around 35 billion. With such levels of liquidity, certainly they are going to raise the money they are looking for. And then two, with the interest rates going down, it brings a question of controlling inflation, which I believe the central bank will be quite proactive in this, whereby they don't want to see a situation whereby inflation again becomes a nightmare with decreasing interest rates. So my take is, in the short run, we are likely to see some bit of a speculative trends in the short end of the yield curve. But as time goes by, we are likely to see a stability in the interest rates, whereby it will give some comfort in the levels of inflation, which is quite key to investment. And again, also most people would like to price their assets. And if these assets are very few and a lot of money, the central bank has to give a balance between, has to take a balance in its monetary policy.